upload. I don't know what I'm gonna do, but something in me is telling me that I should fucking fund my account. Stop being. Uh, I don't want to use too many provocative words, but yeah, something's telling me that I should just fund my account. I wasted a lot of money this weekend. I don't want to lie. Let's see what's been happening. Let's see what's been happening. Yep, this is gold. Gold last week. You see, last week you haven't really analyzed a lot. Oh yeah, oh of course, yeah, we did that. I forgot, I even forgot. But hey, let's look at gold, what it has been doing. It's NFP week this week. Well, this is the beginning of June. The beginning of June. We're gonna analyze gold from here. See what's happening with gold. See, gold has been giving us this, right? So now we look at what gold has been doing last week. Because gold has been, we can analyze the same thing over and over again. Gold moves the way that it moves. You know, it gave us this and then boom, what happened? There was a high, gold came and retest. If you don't see that high, let me do this. Right? There was this inner high that was retested, but the current high from that, well, it's not currently the current high, but the high that was more prominent was this one. Right? And what can we say about gold? Gold created this highs. Boom. We expected it to retest, didn't, but came in. We expected it to retest, didn't, but this highs momentum was high, dog. Momentum was really high. The reason why I'm doing this is because I'm not gonna bullshit you into trading your SMCs, your what and what. Nah, I'm just gonna keep it real with you. This is what I'm seeing. Gold created this high. What happened? The market played along, broke these highs, retested, came and retested a couple of times. Now gold created this high, right? And I might put this here because of it's very important. I'll tell you why. Right? That high. Although it had created this low, I'll expect it to kind of like come around here, play around, right? So we'll take our first entries around here, here, light entries, and we'll wait for gold to go down here until it goes up there. We're not expecting it to go below that. But let's remove this. And the reason why I did that is because this was a low. And then since this is a high, was supposed to be retested upon. You see, gold broke it. Gold broke below this high. Right? And now we have that. So let's remove that. When you look at current market price is very stressful because you know it depends how you enter your trades. So that's gold. The other market that I love, of course, Nasdaq. You know that I love Nasdaq. Second to gold. Nothing else is better than Nasdaq and gold. I would say US30, but I've never really liked US30. I have to be honest. Sheesh, man, what happened? Oh yeah, I remember this. I added on to the analysis of last time, right? But it did go to the upside. See, this is how the market becomes easy for yourself. You can just trade market price, do this, highs, lows, highs, you know, retest it on these highs, and then highs, boom. Well, they didn't really reach. I'd put this, doesn't really matter. You know, it did come here, I expected it to retest. It did play along, but hey, come on, it's the market. We don't expect it to be perfect. And then we have this, right? When we go to lower time frames, you might understand, okay, why the market is doing these kind of things. I would expected it to kind of like retest from here, go up, even though if it does this, it doesn't matter because it's not like we entered full margin so that the market is gonna take us out. We have our stop losses maybe below here, right? So, but I didn't have a stop loss below that. You saw where my stop loss was. So it did this and then continue to the upside. That's the movement, the way it moves. It moves in highs and lows. Just because it went under doesn't mean that it didn't move in highs and lows. It did, right? And the only thing you can do is enter lightly. You know, the thing is not about the the quantity of entering, is the quality of their positions. Because of if you were patient enough to take all these trades that were highlighted in green to scale your account. Because if you are trading a small account, you can enter, go out, enter, go out, enter, go out. But if you can be able to be patient enough to scale your account, enter these trades, boom, the market, enter your buy, boom, the market breaks out from this high, breaks out, comes down, enter a buy, it plays around, you can enter a second one, breaks out, enter a buy, goes out, breaks out, enter a buy. When you put all these buys together, they compound because the buy that you entered here, for it to reach here, and the ones that you're gonna add here, when you increase your lot size, for it to reach here, and the one that you're gonna enter around here, adding your lot size again, increasing your lot size, when it gets here, that's a lot of compounded money. So I would like to teach people how to, well, I don't want to teach anybody. This is for myself, but I know eventually people are going to have to see this because it's on YouTube, right? So eventually I want people to understand that, sometimes we want money now, but it's very important to what is very important to always trade, always trade thinking about compounding the account. It's better into trades. If you enter a buy and you leave it there for around, if you don't have a take profit and you leave it there for around, let's say a week, when it reaches the top and you put your trades on break even, you can see more continuation buys and you can add or scale in to those buys. That's like basically you have a risk-free trade and then you add to it and then you wait for it to get into profit. That's even a more risk-free trade, especially when it gets into profits for like a couple of days, and then what do you do? Or for a couple of hours, and what do? You put your stop loss to break even for your last week's trades and the trades that you took. Right? It's money, but of course we want our money today. We are not. I would like to encourage people to trade more like swing traders. Although I am a day trader, but I did start like swing trading. That's how I was able to be comfortable with ending positions and understanding this method of trading, because I was able to take positions from, let's say, if we are in a bearish market, take positions in the high and let it swing to the low, right? And then after that, I noticed, oh, but we have highs and lows within these highs, right? Like for example, I was able to take position from a high and then let it swing to the low. And I realized, oh, if I take positions here and I like leave the market, go get there, I'm able to add to my trades. I'm willing to I'm able to add to my trades, and that's how I managed to understand the market the way I understand it now. Plus, of course, some few videos, you can hear with my terminology when I use the step ladder and all that. That terminologies are familiar. Plus that, but I was able to identify how the market moves from swinging. In fact, unfortunately, I was swinging smaller amounts, but I guess, yeah, you have to start somewhere. So I'm gonna end here. I'm not gonna go. Yeah, it's a lot. It's a lot of space. I'm not gonna go anywhere above 11 minutes. I don't know if any of my videos I have, but I'm not gonna do it. Enjoy your day. I'm gonna be uploading this. Uh, and then again, keep coming back here on Payment to check the videos. I know sometimes it's hard to kind of like remember how you trade. So come back, watch the video. And if anyone wants to watch, comment, it's fine. I don't give a shit either way. I'm doing this for me. So yeah, peace.